Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, we're going to talk about the best mortgage rates in the market. I've got all the analysis done. We've looked at what the best mortgages are for buy-to-lets, for HMOs, for residential mortgages, first-time buyers, and all of those different types of mortgage style. And so you can really understand what the good deals are on the market right now. Now, recently, mortgage rates in the summer were dropping and we had some really good rates, but more recently rates have gone up, and that's since the budget, since the election in America. Things have been a little bit more turbulent. So I've gone through all the different rates and I was surprised. Some have actually gone down. There are, of course, going to be others that have gone up. So I'm going to give you all of those and give you a real understanding of where the market sits right now. So maybe you're looking to get a mortgage now, immediately, or maybe in the next 6-month window you're looking, or maybe you just like to know what's going on in the market. We're going to cover all of that in this video. So if you're new around here and you haven't done already, make sure you do subscribe to the channel down there and hit the bell notification. We're on the way to 33,000 subscribers. We've got new mortgage videos every day, property content talking about house prices, interest rates, leasehold reform, investing in property, and much more. And let's get more views on this video by everyone taking a moment and smashing like down there. That really helps with the YouTube algorithm. Go on, do it right now. Smash like. That will push this video to more people, and lots of people need to know what is going on in the mortgage market right now because it is turbulent for sure. So one thing I'll say before we jump into these rates is, if you are someone that is going to need a new mortgage in the next few months, let's just say 6 months, most lenders will let you apply for a new mortgage up to 6 months prior to when you need that mortgage, 6 months ahead of time. So this means that you can fix in a rate right now. You can lock in a rate right now because at the moment there is some uncertainty. Is inflation coming back? What's going to happen when the tariffs hit in America? Is that going to change interest rates? We don't know. Nobody knows for sure. So here's a scenario. Let's just say you have a mortgage that expires in the next 6 months and you want to fix that. So you go to a lender, you get your deal sorted, you get the offer out, and that fixes your rate for you as it stands right now. Now, in that 6-month window, before you actually start that deal, if rates go higher, which they have done in the last couple of weeks, then you fixed your lower rate. You're confirmed at that lower rate. You don't have to worry about it. But if rates drop, because you haven't started that new deal, you can call the lender or your broker and fix onto a better deal. Most don't charge you. Some might charge you a small admin fee. But that gives you your worst case scenario. That's really important. If you didn't know that, a lot of people don't. Make sure you do that and shop early to get the best rate for yourself. So let's have a look at what is the best rates on the market at the moment. So this first slide here is about HMO mortgages. This stands for House of Multiple Occupancy, like student accommodation properties. And right now, the Mortgage Works have got the best deal. They've actually increased and decreased some rates that you can see there. So Mortgage Works are saying on a 5-year deal, they've put the rate up somewhat. It's gone to 5.29%. And the fees on that deal are 3% of the borrowing that you have on the property. So if you borrow 100 grand, there's going to be a £3,000 fee on top of that. And they will lend you up to 75% loan to value. Same as a buy-to-let mortgage pretty much on that one. On their 2-year deal, it's actually gone down. So shockingly, with all the deals that have got more expensive recently, the Mortgage Works has dropped the 2-year deal to 4.74%, a smidge down. But every little penny counts because these are interest-only mortgages. And so that will make a difference in the payments. The fees on this one are 3%, and it's 75% loan-to-value again on that one as well. So Mortgage Works is definitely the best option for HMO mortgages. Now, buy-to-let in a limited company. If you get a buy-to-let now and you're buying a new one, I highly recommend that you buy it in a limited company. It means your tax is more efficient. It means everything is just better run. And so the Mortgage Works have the best deals again on those deals. Mortgage Works, if you didn't know, is part of Nationwide. So they are a big lender, just in case you've never heard of the name, because not everyone knows them. So they have a 5-year deal. They're all over the place on these rates, right? They've decreased the 5-year deal, but increased the 2-year deal. So the 5-year deal is down to 4.99%. You always pay a little bit higher on a limited company mortgage. That's always the case. There isn't the amount of lenders out there that do this, so they are a little bit more expensive. So 4.99%, 3% fees, 75% loan to value is what they'll lend you over 5 years, which is good. On the 2-year deal, that is at 4.89. That has risen slightly. So that has gone up a smidge there as well. The fees are 3%. The loan to value is 75% on that one. So go and check out the Mortgage Works. Speak to your broker if you want to buy a buy-to-let. And there are some good deals around at the moment. Buy-to-let in your personal name. This is how most buy-to-lets are, because buy-to-let's been going on for decades, and historically we all bought them in our personal name. The majority of my portfolio is in my personal name, and a lot of probably, I don't know for sure, but I'm sure it's at least 80% of buy-to-let properties would still be in a personal name, because it's a new thing to buy in a limited company. So if you have an existing buy-to-let, the 5-year deal has gone up, still under 4%. I was surprised when I saw this, because a lot of deals are above 4% now. So the 5-year deal is at 3.99%. The fees are 3%. And if you're spreading those fees over 5 years, it's not as bad, is it? It is less than 1% extra a year. The loan to value is 75%, as with all buy-to-lets. So Mortgage Works is a good deal here. 2-year deal, this has increased as well. It was at 3.49%. It's gone to 3.59%. So a little bit up, but not too bad. It is still under 4%. As I said, I was surprised when I seen this. The fees are obviously a little higher. On these deals, they did have £1,500 fees. They've gone back to the 3%. So they have increased the fees as well on both of these products, just for transparency. So 3%, 75% loan to value. So go and check those guys out. That's a good option. Let's look at residential mortgages now. And these are if you have a 25% deposit or 25% equity. They're both the same. So the 5-year deal is with Barclays. I did a video yesterday saying Barclays are cutting rates. This has already come through today, and that's great to see. The 5-year deal is at 4.24%. It is an increase since we last did it, so it is more expensive, but it is a cut on Barclays, if that makes sense. So since we last did this roundup, the rate of 4.25 is more expensive than the best 5-year deal, but Barclays have come down on their rate, and they are now the cheapest. Fees are 999 rather than the percentage. A lot of people prefer that. Loan to value here is 75%. So not bad, and that gives you an opportunity if you've got some equity or a big deposit if you're a first-time buyer. 2-year deal, Nationwide, 4.35%. This is more expensive, but still, it's not a particularly bad rate. The fees are 899. Loan to value is 75% on this one as well. So if we look at this so far, nearly all the good deals have been with Nationwide. I think Nationwide also own Virgin Money as well, which should be coming up in the next slide. So they are being really aggressive at owning most of the mortgage market and really taking their slice of the pie. What we hopefully will see, I don't think before Christmas, is a little bit more competition coming. NatWest, a few times this year, they wanted to get quite aggressive on pricing to get some more market share, and that was good when we saw that. So let's have a look at the residential mortgages. If you've got a smaller deposit, so if you're a first-time buyer with a smaller deposit, or you've just got a small amount of equity in that property, Virgin Money is the best deal. Again, it's nationwide, all over the place here. 5-year deal is at 4.59%. That is more expensive than the previous time we did this. So this rate has gone up. 995 in fees, 90% loan to value. The 2-year deal is just under 5%, 4.98%. That is also an increase, and 995 with a 90% loan to value. So yeah, on the whole, rates definitely have gone up since we last did this a few weeks ago. Where are we expecting them to go? I don't think you're going to see a lot of movement until after Christmas now. You've got to think of it as a marketing play here. If you're NatWest and you're thinking, you know what, I'm going to cut my rate. If you cut it before Christmas, you've cut your rate then, and I don't think you're going to get loads of applications. It's not top of mind for a lot of people to get a new mortgage before Christmas. People will wait until January until they start shopping again, because even if you start the process, you've got the valuers are going to be difficult to get out. You've got the offers are going to be hard to get out. You've got the solicitors that are going to be on holiday for 2 weeks. So I don't think you're going to see much movement until next year. And also, speaking with my solicitor today, I've got a deal finishing today, they were saying that the market is still quite buoyant at the moment. I did some video content where I said October was busy. They're still feeling that. The deals are still going through at the moment. And a lot of people think the market will be okay-ish, fairly buoyant, fairly busy until the spring. You've got that stamp duty holiday or discount that ends at the end of March. And so I think the last transactions that will benefit from that will probably start in January. I think it's possible to buy a house in January, get it all sorted, complete by that deadline. And there will be people that will want to do that. Won't be great for people in chains. There'll be a lot of pressure to get those deals complete. But I think that will keep the market moving. And the point relevant to mortgages on that is that if there's lots of applications coming in to mortgage lenders, then they don't need to discount the rate. Even if they get a drop in what they can borrow at, they won't pass that on to us until things start slowing down and they're not hitting their targets and stuff like that. So that's the analysis. The analysis is most rates are up, unfortunately, but you should secure a rate now if you've got a deal expiring in the next 6 months. And then if rates do come down prior to you starting that, switch on to the better rate. But if they go up, you've secured your best rate. That's my message for you guys. Do like this video, guys. That really helps me with the YouTube algorithm. Let me know your thoughts or questions or observations. Always comment on my videos, guys. I personally reply to every single comment, even if it takes me to 11 o'clock at night. I appreciate some of you that comment nearly on every video. So thanks to everybody that does that. And do check out all the other content on my channel, including this video right here.